Good morning, SMF Street Traders. We're going to take a look at the Dow Jones, the pros, the cons of the bear versus the bulls, and what September has brought. Here I have a weekly chart on the Dow Jones. What we would like to say is that there was a period of time of rally. We had these rallies that have filled up here at these tops. That's the top there at 10.7. Here is where the weekly rally on very light volume on this month right here. So let's take a look at it. The dog days of August were right here, and that was the end of August here, starting the 29th, going into September. The beginning part of what we were doing back here on August 1, which is right here, as we were saying that we were taking our shorts, and they worked out. We got a double bottom action week price action on that weekly right here. We have come back above the key areas on a weekly chart, such as rising moving averages. But as we go up through the trend, notice that the red line is a 20-week declining moving average. So SMF Street, let's be aware that this uptrend here is going to diminish. It means that the power of the momentum is going to be hit very hard here at resistance in the near future. It means that the 20-week has crossed over the 10-week. It's crossed over also the 50-week moving average. That's the pink line. And as they separate, as you've been taught in the SMF Pro Trading Street School, is that trend, that momentum will weaken, because you cannot have a declining 20-week moving average and an extended sustainable bull trend. The kinds of things that we look at that always works, and let's give examples once again. The examples is when you have a 20-week moving average going long term, ascending in its value, that's when you get these weekly breakouts, and the Dow acted real nice until we got up to the topping pattern. As I move this weekly chart over here, the 20-week still kept rising, and we kept rallying. Say I showed the 2009, now this is the 2010 rally, because the moving averages are going, the weekly moving averages are going in the right direction. They're ascending. They're going up in value. That's why these weekly trends last. However, on the other hand, SMF Street Traders, very important to realize that we started to tilt in the red line at that 20-week. Therefore, we sold off, we came up, but we failed that rally there for that very beginning reason of that declining 20-week moving average. The same will apply here as far as the weekly charts go, that when moving averages cross over on weekly and monthly, that is the bearish part. The bullish part is that weekly sell or buy signal is still on there for you. However, let's be cautious about sustainability of momentum, trend momentum, price action momentum, all of these things that need to play in. So basically, we're going into a major earnings session starting October 4th, and growth is a lot slower. The couple of the bullish things is that yes, the 10-week and the 50-week are intersecting there. The problem that we're having is it's been a short, light volume short cover rally. Equities that have been short, that have high interest shorts, they buy back to cover on the lower volume, and that raises these things. We're very cautious as to drawing this very trend line here, and like any top, when the players start to come in, and what you see today, that's a bullish thing above 10,469 and heading higher. That is bullish. The problem that we're having, and today is Tuesday of options expiration. It's a 5-day options expiration. So a lot of this near-term noise isn't going to make a lot of sense, because options expiration, it's after the options expiration. So options expire on 9/17, so you get into next week and you start going into these earnings in October. I can tell you that the earnings season is going to be a lower growth. We're going to be watching at any point where there's a reversal. We're going to be watching, do we close back below this weekly bar? If we do, and it becomes resistance, and that means that there would be a reversal in play. Like I said, SMF Street Traders will take this call options expiration, put options expiration, the imbalance ratios between calls and puts related to indexes such as the Dow and other key indexes. As far as the daily chart goes, well, this is what the public looks at. Bullish part, you got a double daily buy signal. You're overbought here at 88.45%. You're above that 200-day moving average, and these are simple moving averages, but we're going to come up here to the neckline at 10.612. That's going to be going right there. We did clear that top. We cleared half of our bar here where the big downtrend bar was, where we set the lows in. Now, as far as the daily chart, a lot of the public people, you know, they try to figure out what charts mean. A chart's a chart. However, there are different mathematical equations that go into relevancy at trends. This upper neckline is where we're going to be watching on the Dow. And let me tell you, during this 5-day period between the 13th and the 17th, during options expiration, you can walk this on light volume. What's going to happen is that you can see this. This is a bottom doji. That's where we started getting net long. But now we've got a double right. So here's breakout 1. Here's that other breakout 2. A lot of short covering, low volume short covering that has pushed it up. Once the cycle takes its course, though, we're going to see where that buyer and that seller is. And is the buyer really in or not? And we have bucked the trend, the September rally, is that in the first 2 weeks, and we got the second half of September to go through, the first 2 weeks we haven't had a September like this. So basically what I want you to know, you have to go back 60 years to see a September move in the first couple of weeks go higher. But let me caution you one thing about the mechanical side of the market is taking that short interest off makes equities and indexes go higher. I will tell you with my experience is that once those short sellers have come off of the table, meaning that the shorts cover the amount of short interest, that once it comes off the tape, then that's where we're going to look to see if we start to collapse. On the weekly chart, it's very important with this 20-week crossover, the 50 and the 10. I haven't seen one yet that would hold that sustainability. And these are the resistance lines up there as far as bear and bull case goes. We will move in at any time when this rally fails and start looking at the undervalued bear ETFs, and you can stay tuned for that.